The Chinese crackdown on Canadian canola is growing, and Viterra is the latest target. Our guest says this is the latest development that's throwing the agricultural sector into disarray. We're joined by Al Mussel, research lead at Agri-Food Economic Systems. Great to see you.
Thanks very much for having me.
Let's start off with canola. Is this a gambit by the Chinese saying they're concerned about pests in Canadian canola?
Well, I don't think we know, because I don't think they've, as best my knowledge, they haven't said. It appears consistent with the broader political tensions that we're having with China. So that's really all we have to go on at this point.
The detention of the Huawei CFO, obviously a burr under the saddle here. A huge export. I mean, it's Canada's biggest crop, canola, and it's got to be one of our biggest agricultural exports.
Yeah, I believe in 2018 value is 2.7 billion. So this is a major loss. It's almost 5 million tons.
To China alone, or
to China alone? Yes.
And it's something like 40% of our exports
Correct.
Go there.
Yes, that's right.
So this is particularly tough for farmers, because planting season for canola isn't too far off.
Absolutely. It's difficult for the grain trade and merchandising this. So who wants to take the risk of exporting canola? And of course, now we've got discussion around wheat, peas, and flax as well that go into the mix. So we're worried about that. So who can afford to take that risk? But everything goes back to the producer at the end of the day. So how farmers will decide what they should be planting this spring based on what expectation of market clearing and pricing, et cetera, is completely up in the air at this point.
And yet another joker in the pack is the possibility that Washington and Beijing settle their trade war, and that could open the doors for U.S. canola in the Chinese market.
Well, that's the challenge that we have, Andrew, is we've got a lot of, any one of the various issues we're dealing with right now probably would be regarded as a crisis in its own right, but we're dealing with multiple of them now. So if the U.S. resolves its trade tensions with China, one of the concerns is that part of that deal could be some sort of a managed trade agreement, similar to what they've had with some countries around steel and aluminum. So perhaps they get the Chinese to agree to buy a particular volume of corn or pork or soybeans or what have you. Soybeans is probably less likely, but the challenge for Canada as a competing export country is if they have a managed trade arrangement, then it turns around and just puts all the volatility in the marketplace back on third countries, of which we're a major supplier.
Right. I stupidly said, actually, U.S. canola exports. I don't think they export a significant amount of canola.
No,
right.
It's a Canadian issue.
Oh, okay. Yeah. So we've got an interesting, what a lame word. We have a situation in the agricultural market right now. Again, it goes back to China. They had this swine disease. That's been radically pushing up pork prices. So farmers are looking at low grain prices in many cases, but high livestock prices.
Well, the concern is it's frankly so big it's hard for people to get their head around. So the hole that appears is going to be blown in the Chinese pork supply chain would exceed the size of North American production, just to put it into some context.
That's the shortfall in pork.
Within this year. So how do we begin to think about how that's backfilled, how market adjustments occur, et cetera? Our sort of strategic level estimate is there just isn't enough meat in the world to fill this hole. So we're going to get into rationing, and rationing will come with potentially significantly higher prices.
And hog futures have already moved up sharply.
Yes, I think you had the chart.
It's
the bull market in pork is, and this is just simply, it's developed in less than the last 10 days of trading. It's remarkable. You think about particularly farmers' positions trying to set a sell in a market like this and hold on to it, and the cash that they could burn through trying to do that. The financial exposure to this is huge.
So, that sounds like it's good news for the Canadian pork producers, though.
Well, it is, but from thinking about it from a trading, a hedging or trading perspective, the financing of a marketplace with volatility like this is something entirely different.
Look at that. Yeah, that's just crazy, as you say, just in the past couple of days. So it's the African swine fever, and it's just devastated the Chinese hogs?
Well, the curious thing here is what seems to have sparked this bull rally was a surprise export sale by the U.S. to China. And of course, China has duties on pork of up to, I think it's around 70%. Presumably, that sale involved the payment of those duties, but it was a surprise, and that seems to have sparked this rally. In the intervening period, we now have these major floods in the Midwest, which are causing other kinds of production disruptions. So at some point here, it'll be hard to tell what kind of takes over the rally. Our sense is that the real African swine fever rally is potentially months away. So this could only be the beginning.
There could be a global shortage of meat because the damage from this thing has been so big.
Yes, that's right.
Could we talk about corn? Obviously
Yes.
very important to farmers in central Canada, in particular Ontario. Corn has been under pressure over the past while. I think part of the fear was that the Chinese wouldn't be taking U.S. corn. What's the outlook for corn prices?
Well, the interesting thing is China has not imported a great deal of U.S. corn for a while. The issue on corn is if you have prolonged trade disruptions between the U.S. and China in soybeans, which looks likely because essentially Brazil has taken over that market, that the land base will shift from soybeans into growing corn.
The U.S. farmers.
Right.
Yeah.
So we have a report coming out at the end of this week. It's a USDA Planning Intentions report. That'll be watched very closely. I think one of the worries, probably from a Canadian perspective, is we've got the prospect. We already have low soybean prices. We're going to have low canola prices with the loss of this market access. If the U.S. acreage shifts sharply into corn, then you're going to have low corn prices in Canada, and so goes corn, so goes wheat typically. So you have this remarkable situation in which you could have, for this year at least, or much of it, very low crop prices and very high livestock and meat prices. I think it's unprecedented, as far as I know.
We'll have to leave it there. Al, thank you very much indeed.
Thanks very much for having me.
Al Mussel, Research Lead, Agri-Food Economic Systems.